let's get to the meat of what we're talking about.
Yes.
Our opinion. Should you buy now if you need to buy, or should you try to hold off till some interest rate cuts if you have a real estate need? So real estate, what to do if you find yourself in need of, say, a home. You all need a place to live. So
Yeah, conventional wisdom is that, people don't want to, buy homes right now. And just let's focus on the first-time home buyer as we try and we're trying with this podcast to, help younger people make, good financial decisions. So first, should the first-time home buyer wait until interest rates come down because then housing will be more affordable? I think the answer to that is no, because what we're seeing in most markets, not all, but most markets, is that the real estate market has cooled considerably because of the higher interest rates. And unlike, a couple of years ago where bidding wars, especially in places like where we live in the Phoenix, Scottsdale area, where you go to try and put an offer in on a house and there's 55 other offers on the first day that it hits the market. It was insane. That's not happening right now. And so you're much more likely to get a decent price. And, because you can, refinancing is relatively possible these days and has been for a while. If you're borrowing to buy a home, obviously it limits how much home you can buy by virtue of, higher interest rates mean it's harder to qualify. Therefore you need more income to be able to qualify when rates are higher. So that affordability aspect of housing is low. But if you somehow can act and could get away with getting a mortgage and qualifying and all that, I think you're better off buying while the market isn't in a frenzy and you may be able to get a better deal than waiting for interest rates to come down, and then we're back to this craziness, and you might have to pay through the nose or pay up significantly to just get in. All of this, the caveat on all of this being that make sure you're buying in a place where is in front of the path of growth, and certainly this Phoenix market is, and there places like Texas and Tennessee and Oklahoma and Florida and Georgia, and there are places South Carolina, North Carolina. And others, Idaho, that are definitely in the path of growth, as evidenced by what it costs to buy a one-way U-Haul, rent a one-way U-Haul from states that I didn't mention to states that I do mention. It's very expensive, like significantly more expensive than going the other way. So that should tell you something about where the path of growth is, and I expect that will continue.
Look where the people from Illinois, New York, and California are going. Yeah. So, and try to buy before they've ruined it.
That's not to say that, and I would say being contrarian, there could be an argument back. Well, it's been that way now for some time, and we're due for a correction on that, and those places could start getting policy right again, and then that changes things. And I would agree that's true. But I'm afraid that we're so far away in those places from policies changing to where businesses are more attracted to stay in the places that are right now losing population, that it doesn't appear that there's going to be anytime soon we're going to see that correction back the other. Maybe you'll have a correction, but any kind of significant change in trend that results in a reversal of that, I don't see that. I don't see that's in the cards anytime soon.
And I would say that we're talking about those who can't afford to do so. I'm going to give some very controversial financial advice, and I'm going to say if you can't afford to do something, don't do it. So if you can't afford to buy a house, this isn't a conversation that we're really having, but generally speaking, when you look at real estate, the best time to purchase real estate is when you can afford it. And so trying to time the market, much like stocks, can be a bit of a fool's errand. And there's a good quote last episode of The Office where Andy Bernard says, "I wish there were a way to know when you're in the good old days before you've actually left them." And I think that a lot of people who are in the real estate investing, and again, we're not talking about people what investors should do, but there is something you can learn. The people who are in real estate investing are looking at this as a buying opportunity because the market is quieted. You've got low inventory, true, but you've also got low competition. You don't have to deal with that added stress that you mentioned of having a bunch of offers on a house. I think you're going to see people eventually find that they're going to, on paper, be in better position to afford a good down payment, and on paper able to afford a better home, but they're going to immediately get arbitraged out of that home once the interest rates start going up. And also, last year in March, and again, I'm borrowing off of people smarter than me when it comes to real estate, but last year in March, the normal seasonality we saw largely got paused in the real estate market. People got panicked because the rates were up so high, and they put off decisions. Spring is generally the busy time for real estate, and I think that a lot of people who punted for a year are going to find that marriages happen. People have kids. People need bigger homes. Life goes on, and they're going to realize that these interest rates are still relatively low by historical standards. And if they can afford to act, I think it would be wise to do so. And I think we're going to see a lot of people do that, irrespective of I didn't say irregardless, but irrespective of what the Fed does. So,
yeah, I mean, these interest rates are not that far out of the norm from a long-term historical standpoint. I remember the first house we ever bought was at a much higher interest rate than it is today. So we just got so conditioned to these, Fed's 0% interest rate policy that led to, 3%, 30-year mortgages, which is just insane. But we're probably going to, work our way back down. So if mortgage rates today are, a bit below 7, I think we're at right now on the 30-year mortgage.
I think it's 7.5. I just looked, something like that.
7.5?
Yeah.
I thought it was a bit below 7. So, okay. Well, in any event, I think it probably finds its way back into the 5s. 5, maybe 6%. And of course, it's going to vary depending on credit worthiness and, size and what have you. But it wouldn't surprise me if by this time next year, we're back in the 5s. And depending on how slow the economy is, which kind of probably leads into our second segment. And you might be asking why, but I'll answer why once we get to the second. As far as future is concerned and where interest rates and where the economy is going.
I think generally speaking, our advice is going to be pretty consistent. When you have money to invest, do it. And if you're waiting to time, and real estate is an investment, it's also an emotional, utilitarian decision, but it's an investment as well. And when you can afford to do it, you should do it, because trust me, we're not that smart. So if you're waiting to get in, everyone else is too. And I think you're just going to trade one set of problems for another if you wait. So, and I think my good friend Jerry agrees. Again, this is all assuming.
Speaking. Yeah. The only thing I might take exception to is, yes, by default, I think real estate or your home has become an investment, but I don't think it should be. It should be a consumption item, and we can discuss and debate why it is that it's become more of an investment, and I think it has almost everything to do with the tax code. Which is part of the reason why values are up as much as they are. But in the time price theory of economics, which we've talked about, where people's incomes have done much better than the price of things, even housing, as ridiculously inflated as it has been, has generally incomes have generally kept up if you look at it from a time price theory standpoint. So how long does it take for somebody to work to earn the money to pay the mortgage? And that number has been coming down. Not as much as in broader commodities, but it has come down, or at least stayed stable. And we've talked about that before, but my point is that it really shouldn't be an investment, because it's not something it shouldn't be something that can have the ability to pay you something. You pay to be in it. So I think there's this kind of balancing act, even still, given inflation in housing over years, decades even, more so decades, that there's a balance between it's an investment and it's a consumption item. But again, we can debate that for a long time.
Noted.